Welcome back. It's time for Overlooked Stocks, and let's bring in Ben Watson. He's the Senior Manager of Trading Services at Charles Schwab. Now, we're looking at Penguin Solutions today, Ben. They're an AI-focused company that's higher after their latest earnings report. Can you tell us a little bit about it?
Yeah, absolutely. And Marley, this is one of those companies that kind of sits in that middleware position. And, you have this in a lot of industries, and we're familiar. You guys were just talking about NVIDIA and the chip space when it comes to AI, which is an important component, kind of that fundamental underlayment. But you think about a company like Penguin, which has three distinct revenue categories. They've got advanced computing, they've got memory solutions, and then they've got this kind of oddball, which is LED lighting, which kind of sits on its own. But in that middleware space, they are the company that puts together the computing systems that brings in those chips from an NVIDIA. Now, on this earnings announcement, the area that they've been growing strongest in has been in that memory space, which is in really in the data center and in the processing side of things. As opposed to a little bit of shrinkage in the computer systems and especially in the lighting space. So this is a company that has an opportunity, and if you look at the transcript from the earnings call, one of their areas for potential opportunity for growth going forward is certainly in that memory space, because it's kind of an ignored space within this middleware position that Penguin sits in. If we look at the performance of the stock, over the quarter or over the course of this last year, it is a little bit of a turnaround story. In fact, this earnings announcement today comes with a big move to the upside. The earnings beat today, and with this 7.9% year-over-year increase in revenue. They say that penguins are flightless birds, but apparently investors looking at this earnings announcement to take flight with the stock today, Marley.
It's so interesting to look at that chart, to take a look at that one-year chart and see that they're only up. I mean, they're basically a full U, up 1% on the year. That, of course, with the boost of 10.5% today. But as you look at year to date, they're up 22%. Yep. So certainly having a good 2025. I think interesting to note when we talk about these semiconductor companies, we're talking about these big names, and it's great we have these things that overlook stocks that flag these, but their price to sales ratio is less than 1. We're used to seeing them higher than 4, some of them higher than 11.
Yeah, and so you can look at it from that perspective and say, hey, this is a company that has, again, that opportunity for growth. And again, one of the reasons why perhaps you've seen off of that April low, which was coincidental to their last earnings announcement, you start to see that stock price move pretty quickly to the upside. However, one of the challenges, if you notice that MACD indicator down in that lower panel, you start to see that momentum fall off a little bit. A bit of a spike today, obviously, with that breakout move, breaks out of the resistance that's been in place there right around that 21.5 mark. And it gets very, very close to touching this 24 resistance, which if you go back into the August timeframe, the July-August timeframe of last year was a bit of a support level, then became a resistance, kind of that bear flag in that downward move, but starting to pivot back to the upside, that 50-period moving average moving a little bit higher here. And if you shift to the shorter term view, if we take a look at the 5-day, 5-minute chart here, Marley, you really start to see the momentum that this stock gained throughout today following that earnings announcement, and then really right at the close came in and blew the doors off of this price, ending up overall up around 10% higher, but notching up around the 24.5 before pulling back a little bit.
And so knowing now, as I'm looking at estimates from the analysts that cover the company right now, they're suggesting revenue should grow by more than 9%, 9.1% over the next year, which is materially lower than the 31% growth forecast for the broader industry. What levels are you keeping an eye on, knowing growth is expected, but it's certainly beneath who would be considered in the same conversation?
Yeah, I think realistically, you have to look at that 24 level, not only in the short-term chart, but on that longer-term chart as potentially an area where they could find some support. But if you kind of go back to what the earnings suggested, their guidance came in kind of right in the middle of the range that they've been reiterating quarter after quarter. And so there is room for some improvement there. Again, they've got some lagging suggestions, some lagging areas in that optimized LED component of their revenue stream. Margins are getting squeezed in a couple of areas, namely the advanced computing, namely that optimized LED, but margins are growing, which is, I think, effectively what's giving that opportunity from the analyst perspective. Margins are growing in the integrated memory space. So I think that gives them that opportunity perhaps to leverage that growth potential to push this stock price a little bit higher.
Well, thanks for the context on this one. We really appreciate it. That's Ben Watson, our Senior Manager of Trading Services at Charles Schwab.